Hello students, in this class we will discuss about right shares. Right shares, or we can say further issue of shares. Provisions of section 62 of the Indian Companies Act 2013 are regarding further issue of shares, or we can say right shares. Where at any time a company having a share capital proposes to increase its subscribed capital by the issue of further shares, such shares can be offered to persons who at the time who at the date of offer are holders of equity shares of the company in proportion as nearly as circumstances admit to be paid up share capital on those shares by sending a letter of offer by mentioning the following conditions. Means when right shares are issued, they are first offered to the existing shareholders who are already shareholders of the company. The offer shall be made by a notice specifying the number of shares offered and limiting a time not being less than 15 days and not exceeding 30 days from the date of offer, within which the offer, if not accepted, shall be deemed to have been declined. Unless the articles of the company otherwise provide, the offer aforesaid shall be deemed to include a right exercisable by the person concerned to renounce the shares offered to him or any of them in favor of any other person, and the notice referred to in clause 1 shall contain a statement of this right. After the expiry of time specified in the notice aforesaid, or on receipt of earlier intimation from the person to whom such notice is given that it declines to accept the shares offered, the board of directors may dispose of them in such manner which is not disadvantageous to the shareholders and the company. To employees under a scheme of employees stock option subject to special resolution passed by the company and subject to such conditions as may be prescribed, or to any persons if it is authorized by a special resolution, whether or not those persons include the persons referred to in clause A or clause B, either in cash or for consideration other than cash. If the price of such share is determined by the valuation consideration other than cash, if the price of such shares is determined by the valuation report to a registered valuer subject to such conditions as may be prescribed. The notice referred to in subclause 1 of clause A of subsection 1 shall be dispatched through registered post or speed post or through electronic mode to all the existing shareholders at least 3 days before the opening of the issue. Nothing in this section shall apply to the increase of the subscribed capital of the company caused by the exercise of an option as a term attached to the debentures issued or loan raised by the company to convert such debentures or loans into shares in a company. Journal entries will be same in respect of right shares are same, passed in the same way as in the case of initial issue of the shares. If the market price of shares is more than the issued price, then the right value, the monetary benefit to the existing shareholders due to right shares is known as value of right. I can explain you with the example that suppose X Limited in the recently published prospectus for issuing 4 lakh equity shares offers to its present members holding 4 lakh equity shares of rupees 20 each 2 lakh equity shares at par in proportion to 2 such equity shares against 4 share held, and the remaining shares are put under public issue at a premium of 10%. Now how will you ascertain the value of right if shares are bought and sold at the rate of rupees 50 on the stock exchange? In that case, the solution for this, for ascertaining the value of right, is that first of all we will be finding out the market price of 4 equity shares. Now the market, as I have given in the question, that market price per share is rupees 50. So the market price of 4 equity share is 4 multiplied by 50 amounts to 200. Then in this case, actually each existing shareholder who is having 4 shares will get 2 shares under right. Then we will be calculating the issue price of 2 new right shares. So that we will be multiplying with the issue price, that is rupees 10. So 2 into 10, issue price is rupees 20, I think. Yeah, issue price is because equity shares are rupees 20 each as mentioned in the question. So issue price of 2 shares, total issue price of 2 shares will be 2 into 20 amounts to rupees 40. So total cost of the 6 shares, 4 already held by the existing shareholder and 2 given in the right. So total will be 6 shares. So the total cost will be the market price was of 4 shares was 200 and the issue price of 2 right shares was 40. So it amounts to 240 rupees. Now in order to calculate the value of right, we will this rupees 240 is the total value of 6 shares. So in order to calculate the value of 1 shares, what we will be doing, we will be dividing to the total cost by 6. So when we divide 240 by 6, we get rupees 40. So x right value of 1 share is equal to rupees 40. So the value of right will be market price of the share was rupees market price of the share was rupees 50, and now we have calculated the x right value is 40. So the value of right is 50 minus 40 amounts to rupees 10. Okay. Now I will be explaining this. This was we can say regarding right shares. And now demat account. What is demat account? An investor can hold securities either in the form of physical paper certificate or in electronic form. A demat account enables an investor to hold securities in electronic format from a physical format is called dematerialization. It is referred to as demat in short. These securities in electronic format are held on investors' behalf by an entity called a depository. This depository interfaces with investors through its agents called depository participants, that is DPs. Investors are required to open an account called the demat account with depository participant to have their securities held in electronic format. Holding securities in an electronic form provides several advantages over holding them in the form of physical certificates. The holding of securities in electronic form has been credited with transforming the Indian stock markets. So this is the definition of demat account. In this class I have explained about first of all the right shares, the meaning of right shares, the rules of issuing the right shares, and I have explained with a practical example that how to calculate the value of right. And then I have explained about the demat account. Demat account, because this is now digital world, everything is in digital form. So demat account is keeping your securities in digital form electronically. It is quite safe and paperless. It is cheaper also, and it takes less time also. Hence this is the most convenient method in today's world. So in this class we discussed about right shares, 2 topics, right shares and demat account, and I hope you all have understood this. Thank you.